Welcome to another episode of Rich Dad StockCast. I'm your host, Denney, and today we're diving into the legacy, the mindset, the wealth-building strategies of one of the greatest investors of all time, Warren Buffett. With Buffett stepping down as CEO of Berkshire Hathaway, now is the perfect moment to reflect on the investing principles that helped him build a fortune and inspire millions. But more importantly, we'll talk about how you can apply those principles today. To help me break this down, I'm joined by, once again, Rich Dad expert Andy Tanner, a guy who knows how to make big ideas from legendary investors and make them practical for real people. And before we dive in, head over to StockCastBonus.com to grab your free investing resources. Whether you're just starting or you've been investing for years, these tools there will help you to invest smarter and build real wealth. Andy, let's talk Buffett. Welcome back to the show.
Oh, I might get emotional on this episode. I'll tell you. The wisdom of Warren Buffett, absolutely phenomenal, life-changing for me. As a teacher, people don't realize he loves being a teacher. He sees himself as a teacher, I think. He said as much. And the mountain of wisdom that he has and the example of temperament. I mean, what an episode this will be. I've studied him so much, and he's blessed my life immensely. Of all the people that I've met a lot, I've rubbed shoulders with a lot of wealthy people, and I've had great mentors where I've, call them up on the phone or go to a meeting or, ask advice. Buffett, I've never had the opportunity to meet. And yet from afar, I don't think there's a person on planet Earth that has had a greater impact in my financial life that I've not met. If you look at those categories, than Warren Buffett. And wow, what a topic this will be. This guy is phenomenal. Fantastic.
I cannot wait to dig in and ask you a million questions about Warren Buffett. But before I do, StockCastBonus.com, what do our listeners get? What do they receive when they go there?
Go there and take action. Passive, being passive and watching videos is really beneficial for people who are interested in success. To move forward and start acting and doing things, if you go to StockCastBonus.com, there's an opportunity to change in behavior. And behavior, when you talk about be, do, have, it's interesting that behave are the bookends of that word, be and have. And many people struggle to take a podcast like this or any other they listen to and actually create action where their daily life changes and they start engaging activities that can make a difference. There's this idea of a locus of control, and there's certain things that I can't, change. I don't have control over, but I'd say the majority of things I can control. And when that locus of control is in self, then you can begin to act. So we have an ebook that's designed to help people take steps. There'll be new habits you'll develop. And what does it look like to behave this way? Not just observe, not just, this is interesting concept, but what are the things and the habits that happen? If I say this, it'll probably ring true. Success comes from good habits. Successful people have successful habits, and habits have very little to do with what we observe or listen to. It has everything to do with what we do each day. And so we have this incredible free download that when you read it, you'll say, as I implement these things, my life will change for the better. It'll improve, and it will bring wealth to your life for sure with those habit changes. So download it. It's powerful. I'll take you through it. And best of all, it's free. And you can learn more about what we do for no charge. But it will take you from being a listener and an observer of information and learning to a participant, an investor, and a doer, where you'll start becoming something rather than just doing and having. You'll have, they say, you are your habits. That's who you are. That's who you become. So, yeah, go there and click and get stuff for free.
There we go. Already dropping gems in there. Successful people have successful habits. I couldn't agree more.
I don't
Now,
know. I don't know that unsuccessful people. I mean, they have habits that are unsuccessful. It's what we do that determines what we get, and what we do is determined by who we become. Be do have for sure.
be do have. All right, so let's talk Buffett. That's what we're here
Yeah.
for. Uh, Thinking about Warren Buffett, he's more than just a billionaire. He's become a symbol of
Hmm.
patience and discipline and strategic thinking, long term thinking. So let's start here. What made Warren Buffett's mindset so different than the average investor?
Well, before I answer the question on mindset, I should, I'm sure Buffett isn't tuning into the Cashflow Academy podcast, but Brother Warren, if you're listening, I have to give a heartfelt thank you for everything you've done for so many people. There's a true principle that says the more people that I serve, the more effective I become. Uh, Berkshire Hathaway is the equivalent of 5% of the S&P. Today I have this smart home stuff with these smart locks that run on batteries. And I got a notice today that my battery needs to be replaced in one of my doors. So I'll ask my son to do that. And I'll pick up a Duracell battery and put them in there. Well, Buffett owns Duracell batteries. There's not a day that goes by that he hasn't created a product somewhere that blesses my life. And so I thank him from the bottom of my heart for not only the products and services he's given, but he's also given so much wisdom over the years. So I would be remiss. I'm sure he's not listening, but I'll put it out there in the universe from the bottom of my heart. Thank you so much for what you've taught my wife and I and my sons. My sons know who he is. They understand compounding, and he is the guy that started compounding when he was 9 years old. 9. And now he's 90. So that's 80 years of compounding. That's billionaireship. And there's just so much we can talk about. So back to your first question after that big thank you and shout out to the greatest investor of all time. No one's done it better. I mean, Jim Simon's got a better return, but he didn't do it better. It was just different. Quant is different than investing. Quant trading is different than being an investor. So anyway, what made his mindset different? Well, Warren gives a lot of credit to his dad. His dad was involved in finance, not to the degree Warren was, but Robert will rail on school teachers a lot because, there's no financial education school. He rails on the school system. I tend to rail less on teachers. I think there's good and bad ones, but I really rail on parents a lot. Why is it the school system's job to raise children all of a sudden? Let them learn their English and their math, but to really create the human being, that's the culture of their household. You find me a successful kid, I'll show you often successful parents. It's not always the case. Some people became successful with crummy dads, but many the way it's worked for eons is the father teaches the son. I think the other thing that helped Warren Buffett's mindset that changed over time wasn't like he was just brilliant at 9. At 9 years old, he understood what he wanted to be. That was the big first thing. Is he says, I'm going to be an investor. That's what I want to do. So he knew what he wanted to become at 9. He had different ideas. He studied technical analysis. He tried to be a trader. When he began, he calls it the cigar butt. You'd have a cigar that was almost out and the price would drop. He says, you know what? It's probably got one little puff left in it. And he'd get him at that cheap price and try to get that one little puff and sell. He bought a lot of really crummy companies that were, used cigars with one more puff left to his foundation. And then so his dad made a big impact. Just in generally, I want to be an investor. And then he enrolled at Columbia. He thought that Benjamin Graham had died. He didn't know he was still alive. And when he found out he was still alive, he wanted to learn from him. The Intelligent Investor very much shaped his mindset, as it did mine. I read it once a year. I do encore reading and I give that thing an encore every year. I read it once a year. The Intelligent Investor was a big one, and then Munger changed his mindset from being this cigar butt guy to saying, "Hey, let's not buy fair companies at great prices. Let's buy great companies at fair prices."
Mm-hmm.
And he took Buffett into like the Coca-Cola era, and he changed Buffett's mindset. So I think Buffett had mentors like his father. Benjamin Graham was a big deal, and Munger was probably the biggest in his life. I would say. So that's where his mindset come from, was mentors like Robert had a rich dad that shaped his thinking, right?
Mm. Now, through all the wisdom, we've all learned from Warren. We all have our favorite quotes. One of my favorite quotes, and it's very famous: "Be fearful when others are greedy. Be greedy when others are fearful." What does that actually mean today in today's market?
I have that quote on my wall, and it's astounding how long it took me to grasp that. Having done this for so long, it took me years finally to say, "Oh my gosh, Black Swan is a Black Friday," and to understand the detachment from fundamentals in terms of pricing. Technical analysis and fundamentals are different studies. And to understand that once you put a price tag on something and it becomes a commodity in and of itself that is subject to supply and demand, that we're not talking about the supply and demand for a soft drink with Coca-Cola. We're talking about supply and demand for the actual shares of Coca-Cola. And people do not understand what stocks are. Some people think they're just pieces of paper, which is not any more true than a deed for a real estate deal, right? Or any or a coat check, for a claim check for a coat, or a valet stub for a car. It's just a piece of paper that represents something tangible. But people don't understand stocks in that when I go to the Nordstrom or wherever you go and you buy a pair of jeans, when you get them home, you clip the price tag off and you don't think about it again. I just use the jeans for what they're intended for, and I go out and wear my blue jeans and use it as clothing and protection from the sun or whatever. If Nordstrom runs a sale 2 weeks later, I don't panic and say, "Gee, I should sell my jeans." I look at them as jeans, not money. Well, when people see stock prices go down, they're feeling like they're losing money. Well, they don't have any money. They own a share of stock. They don't have money. They're like, "Oh my gosh, I'm losing so much money." No, you're not. You bought 100 shares. You still have 100 shares. You don't have any money. Your money was traded or exchanged for the stock a long time ago. And to concentrate on the value of the business, for example, when prices start, here's the value of the business. And when prices start to plummet, everyone thinks you're trying to time the bottom. No, you're not. You're just hitting to where, oh, bang, there's value there now. And maybe I'll even write some puts down here to give you better value. And there's just a certain margin of safety that is created where you can, buy cheap. So when he said, "I will show you how to become, or I will tell you how to become rich," close the doors. Be greedy when people are fearful, and be fearful when people are greedy. If you look at the S&P 500 over the last however many years you want and say, okay, you got 10 different places you can buy, you would pick the bottom of every trough that you could. Pick 10 places to buy. Bottom, 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 bottom. Where fear is at its maximum is where you buy. And that is not an intellectual assent. That is a temperament. That is a growth in temperament, because it takes strength to buy when everyone is selling. It takes temperament to not panic and join the sellers. And yet that's what old man Potter did in A Wonderful Life. Jimmy Stewart's like, he's not selling, he's buying. He's buying up everyone's shares of the bank. He's buying up this town. He's buying up everyone else is panicked, and he's ready to buy. 50 cents on the dollar. And people were like, "Potter's giving 50 cents on the dollar cash. Well, I'm going to Potter." And he's like, 50 cents on the dollar. I mean, it's phenomenal. So yeah, when COVID hit, I was just scared to death for my parents, who were octogenarians. Scared to death for the world and their health. But as far as investing, I told my wife, I go, man, let's back up the truck. I mean, ExxonMobil's $30. Delta Airlines. I mean, all these companies are. I think Ford was $4. It's not that much higher today, but it's doubled, I'm sure. So there's just so many stocks that went cheap in COVID, and that's going to happen again because temperament's not going to change. People are going to panic. They're not going to change. Human beings don't change. They're emotional limbic system creatures that think they're losing money that's not even there. It's a stock you own. It's a company you own. Look at how the company's performing, not what the price is.
There we go. Now, that was one of my favorite quotes.
That's great. I have it on my wall.
It's a phenomenal, and Warren has so many great quotes. In fact, listeners, I would say this in the comments: if you have a favorite quote by Warren, throw it in the comments. I'd love to see what you love.
So many good ones.
But I want to ask you, Andy, what that was my favorite quote. What is one of your favorite quotes?
When the tide goes out, that's when you see who's swimming naked. That's a really that's one of my favorites.
I could see him saying that.
People in Wall Street get over leveraged for sure. And Munger, just another maybe sentimental comment on Buffett. Every year that he attends that Berkshire meeting, and he'll still attend as long as he's alive, I think. I don't think that was the last one unless he passes. And I remember my high school basketball coach, and he had players that were so much better than I was that he grew much closer to. Like, I think one of the players that Rick Majerus grew the closest to was Keith Van Horn. Keith's father passed away when Keith was in college, and Coach became the godfather of his son. And so, there were guys like Keith that were really close to Coach. Me, I was, lousy player, but I loved him. And in December of 2010, I remember I think I was on the road doing an event somewhere, and I got the news. I got a text from someone that said, Coach just passed away, and we knew he was in the hospital. We knew it was close. And I got a text, this coach just passed, and I wept. And it kind of cut me to the quick. I'm an emotional guy, doesn't take a lot to get me, to tear up. But I thought, why am I this devastated? And I realized that it wasn't because I was particularly close to Coach. That wasn't why I was weeping. I've lost family members and been able to hold it together before. Why weep? Just why really, really grieve at his passing? And it wasn't because of my relationship with him. It was because of a love for the game, because an unparalleled encyclopedia of basketball was now closed forever. And a wealth of knowledge and genius about that game that, in my opinion, is just right up there with, I think he's a Mount Rushmore coach. I might be biased, but ask other people on the Mount Rushmore coach, and they'll say probably one of the more underrated, even though he's in the Hall of Fame coaches, especially defensively. And when I realized that knowledge was lost, and no more breakdowns of film, no more insight, no more camps, no more teaching, no more learning from this incredible source, it was closed. It was gone. It was basically lost, into the ether, lost. And I think about Warren Buffett that way. I think about when I get that text and he will be gone someday, inevitably. The loss of financial education, that source, that wellspring, that fountain, will no longer be springing. Now, we have, luckily, all his Berkshire letters. We have tons of film, tons of experience, but nonetheless, an incredible mainstay of wisdom and temperament will be lost. And The sad part is those Ben Graham principles that he lives by will live on because they're generalized, and those who learn them will do even better, because a lot of people say, well, that was the Buffett era, things are different now, when they're not. They're not different. They won't be different. So it will be something to lose Warren Buffett, as it was with Munger, as it was when we lost Charlie Munger. So it'll be emotional. But all those quotes, he's got some great ones. Munger had better one-liners, but Buffett has some great ones too.
That he does. Munger, I didn't really know Munger until I saw him in person. I actually went to the Berkshire Hathaway shareholders years ago. I knew more of Warren than I did of him, but when I walked away, I was like, I really like Munger. That guy has got some wit.
Yeah, he has enough money that he doesn't care what anybody thinks, and so he's tact is not his modus operandi, shall we say.
No, not so much. And then also when he was on stage in front of, 10,000 people, him falling asleep on stage, that was another level.
In front of See's Candies. Yeah.
Yeah.
And Buffett stepping down as CEO, I'm grateful. I think he's doing it because it's hard for him to do the job as well as he wants to do it. I know he loves it. You don't work till you're, in your 90s and, unless you're loving it. And, like a ball player, it's tough to retire. But I think he feels, I don't think he's doing it because he says, well, I just want to take a break. I think he's just like, we need to have a transition. I think it's smarter for the company to do it while he's alive, where he's still around and approving that change. I think it was strategic that way too, I think it's, a great move. George Washington is one of my heroes. There's a wonderful book called His Excellency, which is a biography. And George Washington is special at that he stepped down at the height of his power. He refused to run again. Imagine that. Imagine a politician today saying, it's time for someone else to step up. I'm not going to run again. I'm going to step down, where he would have won a third term easily. But he stepped down at the height of his power. And I think there's a graciousness to that, passing the torch while you're still with us.
I think that is great leadership by Warren Buffett. Not just great investing principles, but great leadership. But let's do this. Yeah. Let's take a quick break. We've just laid the foundation with Buffett's mindset. But go ahead.
We'll do some more lessons when we come back. I'll share some specifics if you'd like. Things that are like writing his letters that really are important.
I love that. And also remember, visit StockCastBonus.com. That's where you're going to find some amazing tools, amazing resources to help you move from guessing to growing. Stick around. We'll be right back.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning as well as it's really solidifying in my mind. And like, they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
All right, welcome back, Andy. Now let's get into Warren Buffett's actual investment philosophy. What are the core rules, or let's say filters, he uses before buying a stock or company? Really, it's buying companies that he's known for.
Yeah.
What would you say?
Buying it. There's so many. Buying a business. Understanding how a business runs. It is interesting that he is kind of a spoof that he and Gates get together and they decide to work at Dairy Queen. Gates can he can run the ice cream, Buffett can't. The guy can't run a cash register. And yet he has petroleum companies, natural gas companies. Duracell batteries is a lot different than See's Candies. Fruit of Loom underwear is a lot different than Geico Insurance. Chevron, oil production, energy production is a lot different than R.C. Willey Furniture. You have all of these companies, both public and wholly owned. How does a guy get that breadth? And it's because he understands what a good business looks like. So Let's start with the moat. One of the things that he talks about, boy, we could do such a long episode on this. One of the things Warren talks about a lot was the moat. And it took me a while to get my head around it. Like, well, I understand what a moat is. It protects the castle. A wide moat's better than a, narrow moat, and a deep moat's better than a shallow moat. And a moat with sharks and alligators is better than a moat with ducks in it, It protects the castle. So I understood what a moat was, but I didn't understand what that looked like in a business. Like, what specifically does it look like? And one of the things I've settled upon, and I don't want to put words in his mouth, maybe he can correct me, but let's kind of look at the quality and the quality of work that is done is where I think it starts, and the need and demand for that work, and the exclusivity of someone that's able to do that work, where others that would try to do that work just would really struggle to do it as well. And I always use my little cash flow jack in the box with three parts: the handle, which is the work, the earnings, which comes out of that work, and then the price tag to buy the box. And I think one of the great case studies for Moat would be in 2008 when he started to acquire shares of Burlington Northern Santa Fe. So let's start with the work before we talked about how he acquired it, by selling puts. The work, if you read the brochure, this is how nutty I am that I go back and study this crap, 2008, how long? That's almost 20 years ago, right? But in 2008, the investor, packet that you can download, the PDF packet for investors, 40% I don't know what it is today, but 40% of the nation's freight in the United States goes through rail. So 40%, it's not quite half, but it's a lot. And Burlington's the largest. A dozen, like 15 million tons of steel, grains, plastics. People, I always defend my asset class. People always say, well, stocks are just paper. You should only buy real estate. Okay, well, if you want to build a house, where are you going to get your lumber? Where are you going to get it? Oh, you're going to get it on Burlington Northern Santa Fe, who's actually using diesel fuel, who's refined by the companies that I own, right? You can't even have a house without coming to me. As an owner of Berkshire Hathaway, and as a result, the owner of Burlington Northern Santa Fe. So, 20 years later, or however long it is, 15 years later, you're looking at like, who's going to compete with Burlington Northern Santa Fe? Who can deliver that amount of lumber, that amount of grain, wheat, food on the table? You talk about food, clothing, and shelter. If you want food, clothing, and shelter, it's going to be on that rail. How are you going to get we don't have gardens in our backyards anymore. The majority of the country is not farming stuff in their backyard. You got to get that there somewhere. Well, you want to put steel on a plane? You're going to FedEx your steel to build your commercial building on a plane, overnight it. It's rail. It just is. It's rail. So that's what a moat is Buffett looks at something like that, I would imagine. I mean, I think he said as much, is like, well, people are going to have to come to me if they want to do that. And so many businesses are dependent on that business, a part of what they do. That's their shipping channel. And so he valued it probably around 102. Ironically, the Ben Graham formula, which isn't the formula he uses, actually valued it at 102 at that time. It's at 80 something, and he's selling puts at $6 a piece for a 2-month put to buy at 75. And he got brilliant. So while everyone else is worried, he's buying when other people are selling, and he's getting paid to do it by selling puts. And I think his final average price when he just bought the whole thing was 102, or somewhere in that neighborhood, north of 100, barely. Well, he did an update, not this year, but last year. He talked about it. He says, to build a company like that now, it'd take $500 billion. So who's gonna just raise a $500 billion, and how long would it take to build a company like that? Most people would look at the expense and the time to build a company like that and say, you know what? It's just easier to give them the money and use them. So that's a moat, in my opinion. We need Coca-Cola. We're addicted to it. You could not stop. If you tried to stop the drive-through at McDonald's for a burger and a Coke, you'd fail. You could not stop that. Go there at lunchtime and just count how many people go through that drive-through and order a Coke. You can't stop Coca-Cola. It was founded in 1886. All the world wars, we had a Coke and a smile. The 60s were on acid having a Coke and a smile. What are you washing that, sugar cube down with? A little Coke, the drink, not the powder. The cola wars, the Pepsi challenge couldn't take it down. Michael Jackson lighted his hair on fire, couldn't take him down. You got Cindy Crawford drinking Pepsi, doesn't matter, still want my Coca-Cola. Subprime meltdown, COVID. So there's over 100 years of just the most brutal economic trials you could ever have, and they're selling 2 billion drinks a day. So it's a moat. It's the safety, the risk management that he does is not in diversification. He says that's an answer to ignorance. The risk management he does is in the moat. It's the quality of work and the necessity of those products. And people think food, clothing, and shelter, baloney. Come on, you don't need communications. If you want to have a Bitcoin, you need to buy my electricity because I own utilities. You need to buy my iPhone to even get your quote on what your Bitcoin is. You got to buy my AT&T network, and you got to buy my Coinbase to have it. So, owning the things that people need to have, you get yourself in a position of power.
Andy, last question. Warren Buffett spends most of his time reading. He's famously known to be a big reader. How important is continuing your education in becoming a better investor?
Boy, you know the right questions to ask me, Del. He does spend a lot of time reading and learning, but he also spends a lot of time doing. He and Gates were, I don't know, probably at Columbia or somewhere, and they opened it up to the crowd with all these MBA students. And they said, what's the most important thing to do every day? And Bill Gates and Buffett said, learn. So, but I think a lot of his reading is to get abreast of information. He wants the information as much as learning. But I also think he's committed to success in what he does. It's not just what he reads, it's what he does. I think that it's his personal development of temperament is often overshadowed by his intellectual genius. But the intelligent investor is not about gathering intel. When emotion goes up, intelligence goes down, and the intelligent investor is really a book on temperament, I think, when I read it. So I think, the financial education is part of your personal development, but it's not just the learning alone. There's temperament to this. There's habits and discipline. That's why we have StockCastBonus.com, is so people can see what habits and discipline and learning, that trifecta coming together. Do have Warren Buffett is who he is, which allows him to do what he does, which allows him to get what he has. And it's who he became. If you want a great family, thing to watch on Netflix, it's an HBO actually. It might be available somewhere else, but it was an HBO documentary called Becoming Warren Buffett. Isn't that interesting? Becoming, do have. And it talks about his compounding. He talks about the most important metric is operational earnings, and that has to do with the work. Once again, the operational earnings is most important in the gap total, even when it is not the biggest thing they see in the gap total every year. Their goal at Berkshire is to acquire large, favorably situated companies that have strong operational earnings, making money not by making it, but by earning it. Earnings, operational earnings by doing quality work. So there's so much there, but your final question, how important is financial education? Well, I'll let the listener answer that question for themselves. I mean, it doesn't matter what I say about it. value is in the eye of the beholder. And if a person doesn't think their financial education is worth little time, we might argue with them. But if they do think education is important and do think reading is important, then go to stockcastbonus.com and read that, because it's free. So just, we could go on. I mean, we ought to just hang out, Dell. And, my team, Noah and Corey and I, we talk about Buffett for hours. We'll sit around roast a hot dog or whatever, sit around my house, and we'll talk about Warren Buffett forever. Corey particularly is an incredible student of Buffett. He owns probably more Berkshire Hathaway than of the three of us. He probably owns the most of it. So great stuff. Great topic. Love Mr. Buffett. We love you so much. And we thank you so much for the letters each year, and for the speeches, and for the wisdom and the example. We thank you all for blessing our lives. He gives a lot of credit to the United States of being born in this time. Well, I'm grateful that I was born during the tenure of Warren Buffett.
Thank you, Andy. Well, that wraps up today's episode of Rich Dad StockCast. Warren Buffett's wealth wasn't built on hype. It was built on clarity, consistency, and cash flow. You don't need to be rich to follow the rules. You just need to be disciplined enough to learn them and apply them. And a huge thank you to Andy Tanner for joining us today. If you're ready to start thinking like an investor, not a trader, head over to stockcastbonus.com. We've got tools there to help you to build wealth the Buffett way, no matter where you're starting at. And if you found today's episode valuable, make sure you like, subscribe, share it with someone who needs a better investing mindset. Thanks again for listening to Rich Dad StockCast. I'm Denney. Stay smart, stay invested, and take control of your financial future.
This podcast is a presentation of Rich Dad Media Network.